Hello Wolfpack. So this is a pretty interesting one, right? We've seen a weekly close above the 200-week SMA. Let me get the chart up here. See, the 200-week SMA, critical region for Bitcoin. We know this already, right? Marked the macro bottom in 2015, marked the macro bottom in 2018, and marked the bottom for the COVID drop in 2020. We've now come back above it. We lost it briefly. We've come back above it. We've closed a weekly candle, multiple weekly candles above it, and we just closed a weekly candle above 23.8K. 23.8K is a critical resistance region. We broke it to the upside, thankfully, and now we are in a region in which we are basically in an open range, right? As seen by the volume profile, going through the entire price action since 2020, this is a gap. There is a gap in the volume profile, meaning that as soon as we enter this range, it's very, very likely we spring to the top of the range, and the top of the range is at 28.6K. And so we could assume, based off this, it's not that simple though, that we could go to 28.6K on this rally. The only problem with that is this, right? This rally has been driven by inflation. Okay, the inflation has topped out, at least in the short term. That's what's driven this rally. How do we know that? We know that because Bitcoin bottomed literally like 2 days, 3 days after the CPI numbers came in for the month of May, right? And then when the CPI numbers came in for the month of June, we basically were, inflation was topped, right? And so throughout the entire time between May and June CPI numbers, we started pumping because market makers already knew that the top was in for inflation, at least for the short term, so they pumped the markets a little bit. And we see that so evidently on the S&P 500. If we go to the S&P, and we'll bring it up here, that's obviously the case. This is not the S&P. Hold on one second. There it is, S&P 500. So for example, CPI came in on around, I think it was around the 13th, 14th, right? Again, 3 days later, we bottomed out on the S&P 500 just a few days after CPI. That's when gas prices, oil prices, whatever, started to drop down, and that's when we started pumping in the market. So it is evident, right? So whether you understand what I said or not, it doesn't matter. I'm telling you right now, the reason why Bitcoin bottomed out, right? And people will debate this. I know a lot of people who would debate this. The reason why I bottomed out, yeah, we were testing macro support, whatever. But the main reason we bottomed out is because inflation topped out. That is the main reason. And that was indicative of the fact that the macro situation was shifting. Now, there is a reasonable chance that inflation was only short-term topping out, and there is a reasonable chance that inflation, in fact, is not topped out yet on the macro, and hence, there is a reasonable chance that Bitcoin is not even bottomed out yet. This is why I'm trying to clear this up. This is why I'm still saying that the 4-year cycle theory and the Q4 bottom theory based on the 4-year cycle is valid. All right, it is still valid. That does not mean it's likely. I don't think it's likely, but I think it is still valid. I think there still is a reasonable chance of it playing out, and I'm not willing to say it won't happen yet because there still is a chance, right? And the only way this can happen, in my opinion, is if inflation has in fact not topped out. So what we can do is we can go ahead and check out oil prices. And oil prices are still on the downfall here. We do, however, have some sort of ascending channel formation. Not that TA matters an awful amount on these kind of things, but it does still matter to a certain extent. We have some sort of descending wedge formation, and so it is technically bullish short term. This is what I mean, right? So oil is a big thing when it comes to CPI. Oil makes up a massive amount of CPI, and hence, if oil's dropping, it's a pretty good indication that inflation is going to come in lower. When it goes up, it's a pretty good indication inflation is going to come in higher. This thing is in a descending wedge formation. We can't be so sure that inflation has topped out on the macro yet. We can say, based off the data we have, that it has topped out, but I'm saying, yeah, we can't be 100% sure of it, and hence we can't be 100% sure that the bottom is in for Bitcoin. So, putting yourself in a position and acting like the bottom is in my opinion, is not the most logical thing to do. Now, with that said, I currently hold a position for Bitcoin. I hold a position for Bitcoin. When we broke above 23.8K, I said this very clearly to you guys. I said breaking above 23.8K, which we did, would be a buy signal for Bitcoin. With that said, if we break below this descending wedge formation, I am selling that immediately, right? Because that would be an indication to me that this structure was actually a bull trap of some sort, and that would be an indication to get out of the market. Now, the good news about that is that, say, for example, we break below the descending wedge on the 20th of August in 5 days. We would still be at profit on the position we took if we entered at 23.8K. So we're in a good position here. We've got a good stake in Bitcoin. We've got a Bitcoin position, if you guys listen to me at least. We've got a Bitcoin position in Bitcoin, right? Obviously in Bitcoin. It's going to be in profit most likely, even if it plays out to the downside, we still had a good trade, right? Whether it be a small profit or not, point is we at least broke even on it. So we're taking pretty much no risk here. So I would say and I know a lot of people listen to me, are objectively in good positions for Bitcoin. But what I would say is that this rally is very, very speculative. And I will say as well that Bitcoin is running headfirst into a major resistance zone. Yep, And if you go to Ethereum, for example, you can see a very similar thing. Ethereum is running headfirst into a major resistance line. The S&P is a very similar thing, running headfirst into a major resistance line. The total cryptocurrency market cap is the same thing, running headfirst into two separate resistance lines. The point is the whole market is running straight head on, bang on into resistance as we are in a bearish structure, as, for example, the volume is decreasing. But we do have good signs as well. That's all the bad signs. The good signs are this. We've broken above the 200-week SMA. We've held above it. We've closed above 23.8K. And if we go to the 3-day chart and we bring up the RSI, we have actually broken a massive RSI downtrend. Let me just get this up one second. So yeah, we've broken this massive RSI downtrend here. If we draw in the line, we can see that clear resistance line. We've actually broken out to the upside. So here's the conclusion for this video, right? Basically, everyone who is either bearish or bullish right now is wrong to a certain extent, right? I don't think there's enough evidence to be bearish or bullish. I genuinely don't, especially on a macro time frame. Shorter term, yeah, maybe short. Macro time frame, we rarely are just in the middle here. We are rarely in no man's land. There is a strong argument to be made for both sides, and both of them are highly speculative arguments, right? The argument for the bullish side is, hey, inflation's topped out. The argument for the bearish side is, hey, inflation hasn't topped out. And there's no real strong case to be made for either of those points. I mean, and if you could make a case, you could easily counteract it with another case, right? So I think that right now, macro, I'm just neutral, right? I don't know what's going to happen macro. I'm neutral, right? What I will say is that in order for me to not be neutral, I would need to see either a break below, right, this macro uptrending line, this yellow line, macro uptrending line, which would be a break below, like, let's see, like 20K, right? In which case I would say we go for lower lows in Q4 as per the 4-year cycle. And what would make me bullish is if we break above 28.6K. Until that point, I'm going to hold my Bitcoin short-term trade. I'm going to play out the invalidation point. If we drop below the wedge, I'm selling. Until that point, I'll swing it to 28.6K. I'm going to play my odds in the short term. I'm not going to try and predict this macro and buy all the Bitcoin I can in the world right now, because for all I know, this is not actually the bottom. And there is case to be made for that. And there's a case to be made for the counteracting side as well. And this is why I'm a confirmation trader. I'm a breakout trader. I don't care about this kind of stuff. This doesn't bother me, right? I trade altcoins daily. I don't need to catch the exact bottom on Bitcoin. It does not bother me in the slightest. It's not where my money is made in the market. And I think that anyone who pays so much attention to the market that they're watching my videos daily, it probably shouldn't be of concern to you either. I think that, I say this with all sincerity, I genuinely think it would do a lot of you good to learn how to trade, to learn how to swing trade, to learn how to scalp trade. I understand people have jobs, people have families, whatever, they don't have time for that. But if you have the time to watch my videos daily, I think genuinely that you probably have the time to at least learn the basics of TA, so you can start to take advantage of the short-term situations and not be too reliant on catching longer-term bottoms and longer-term tops, whatever, because they are extremely difficult to catch. And, you know, a newsflash for you guys, the vast majority of people do not catch them. If you look at what happened with Bitcoin here, for example, we were at the bottom, right? The supposed bottom, it's not even confirmed yet, for like 48 hours. And then and then for example, all the time we spent below 19.6K was like probably accumulatively speaking, probably 5 or 6 days. It's really not a long time. Like, you don't have much time for this kind of thing. And especially when we got down there, inflation just rose like 1% month on month, you know, year on year, I should say. You know, this stuff is crazy difficult to catch. This is why even as an experienced trader who does this full time, who makes every single dime I make is from trading and from Wolves of Crypto, right? But generally speaking, I'd say about 75% of the money I make is from trading, personal trading, right? Even with that kind of knowledge, that kind of experience, I literally have a TA course. I would say it's very, very difficult to catch the bottom, and you probably shouldn't even try to a certain extent. The confirmation and the breakout is much more important. Yes, you can DCA, that's fine, but generally speaking, people who DCA are very happy at DCAing at prices that are ridiculous, right? For example, DCA is probably bought here at 53K, here at 40K, here at 48K, and bought here at 20K, and then they claim they bought 20K, but in reality, the average price is like 44K, right? That's DCAing, that's the danger of DCAing. If you want to DCA a price point in which you think the bottom is close, that's logical, but DCAing in general, just whenever, month on month, I genuinely don't think that's a good strategy. I think that's lazy to a certain extent. I understand people don't have a lot of time, but I think that everyone has the time to put in a little bit of effort when money is involved, right? When you're talking about risking potentially 5-6 figures for some of you people, you know, you can put in a bit of time for that. That's more important than a lot of things, especially if you're taking it very, very seriously and you're watching videos daily and dedicating, you know, 30 minutes to an hour a day watching videos online and watching the market, you can dedicate a bit of time to learning TI. I don't mean to sound condescending or whatever, but that's just my opinion on it. So without further ado, if you want to learn all that stuff, now that we've spoken about it for the last 5 minutes, right, you can, and I'm going to show you how. So first thing is Wolves of Crypto VIP. If you're interested in getting trading signals, click on the join button on my YouTube channel homepage, and you'll get a 20% discount, by the way, for your first month of YouTube memberships. But what we kind of give you guys here, what I give you guys here, is for 40 AUD a month, which is about 28 USD a month, less than $1 a day. You're getting 4 altcoin trading signals per week, prioritized reply to comments, a 2-hour lecture on market psychology, and access to an exclusive Telegram group. Furthermore, if you want to join an exchange that actually cares about its users to a certain extent, I would argue Binance does not, because they have scam wicks and liquidation wicks, and they list rug pulls 24/7. If you want to get an exchange that actually cares, I would recommend BitGet. How do I know they care? Well, first of all, they care about the fundamental rules of cryptocurrency. That's decentralization. How do I know that? They offer non-KYC to anyone who signs up to the exchange, which is the most technically sound thing or fundamentally sound thing you can do as a cryptocurrency exchange. Non-KYC, they've got half the fees of Binance, they've got no scam wicks, no liquidation whips driven by the exchange. This is a no-brainer. Sign up to BitGet using my referral link in the description below to support the channel and support yourself. And then furthermore, if you want to learn how to trade, the Become a Trader course from the Crypto Academy, which is a company developed by myself and Megawell Crypto, is what you need. This course will go through basically from the fundamentals of cryptocurrency to the very, very advanced trading techniques and how to find trades themselves. In between, we're going through technical analysis, market patterns, indicators, whatever, candlestick formations, all that kind of stuff. And you will basically learn from step 1 to step infinite how to trade and how to read charts, etc. You can become the 60th student. We've got 59 students there, so become the 60th one if you want to, and send us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with the relevant information. And lastly, before we end the video, I have on the Limitless YouTube channel, I'll bring it up now, we have actually just kind of released this video, Communism and the Necessity for Inequality. It's premiering right now. If you're interested in a video essay regarding that topic from my second channel, I do a kind of 30-minute video essay there. Go ahead and check it out and leave some support. Give me a like, give me a comment, boost the algorithm for me, because I'm trying really hard to get that second channel up. And it's going to be a pretty big future endeavor, hoping we can grow that over the next course of the next few years, I should say. So thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.